Welcome to the Explainer. Okay, let's just dive right in because today we are looking at something completely unprecedented. We're cracking open the SpaceX Q2 2026 earnings report, but we are doing it strictly through the lens of a bottom line focused investor. So we're going to cut right through the sci fi excitement and look directly at the cash flows, the capital expenditures, and the operational leverage that is fundamentally reshaping aerospace, telecom, and now artificial intelligence. We're going to see exactly how an aerospace manufacturer is actively transforming into this multi-headed cash-generating juggernaut.
Here's our roadmap for today. We'll start with the Q2 financial scorecard, then break down the three pillars driving all this growth: Starship launch economics, Starlink enterprise, and the AI compute profit engine. Finally, we'll cover capital allocation and their accelerating road to $1 trillion.
First up, Section 1, the Q2 financial scorecard and immediate balance sheet strength. Just take a look at the sheer velocity of the top and bottom lines here. We're talking $7.8 billion in revenue in a single quarter. That is a staggering 92% year-over-year growth. But as an investor, your eyes should really go directly to that adjusted EBITDA line, $3.5 billion. That's up 191% from the previous year. This absolutely proves that operating leverage is already kicking in powerfully across all of their business segments. They aren't just growing top-line revenue, they are meaningfully expanding their margins and rapidly closing the gap on net losses, which actually improved by $467 million just this quarter alone.
And that brings us to one of the absolutely most vital numbers for any capital-intensive business: $100 billion. That is SpaceX's current position in cash, cash equivalents, and marketable securities. It was heavily bolstered by their recent $85.7 billion IPO and a massive $25 billion investment-grade bond offering. So the crucial takeaway here is this: SpaceX has the war chest to entirely self-fund extreme capital expenditures moving forward. They can do this without ever needing to dilute shareholders again. Having this kind of fortress balance sheet allows them to invest aggressively, right, while their competitors are struggling to just get funding.
All right, moving into Section 2, Starship, scaling launch economics, and the monopolistic moat. If you really want to understand the scale of SpaceX's dominance, you just have to look at mass to orbit. Right now, the entire rest of the world combined delivers about 300 tons to orbit annually. SpaceX, just using their current Falcon rockets, delivers 2,500 tons, so they already control roughly 80 to 90% of total Earth mass to orbit. But look at the Starship target, well over 1 million tons per year, potentially scaling to 10 million. I mean, wow, this isn't just some incremental improvement, right? It is an absolute paradigm shift that completely breaks traditional aerospace economics as we know it.
Elon Musk actually summed this up perfectly on the earnings call. And I love this quote because it paints such a vivid picture for us as investors. To even plot competitors on the same visual scale as Starship's targets, your nearest competitor is literally a single pixel high. You basically need a microscope to do competitive analysis in this sector right now. Competitors aren't even mathematically visible on the same scale anymore. Honestly, SpaceX even actively encourages competitors to copy them. They don't even bother with patent landmines, simply because the engineering hurdle to replicate a fully reusable million-ton capacity system is just that extreme.
But let's tie this all back to the financials for a second. Right now, the space segment actually showed an adjusted EBITDA loss of $205 million. Now, why is that? Well, it's because they're heavily transitioning their R&D spend towards Starship. Falcon 9 is definitely their current workhorse, but Starship, that's the financial unlock. Cracking the hate shield problem on the recent Flight 13 was a huge, critical milestone, because now Starship is positioned to quadruple payload capacity while simultaneously reducing launch costs by a factor of 10 compared to Falcon 9. Taking short-term R&D losses to unlock a 10x cost reduction, yeah, that is exactly the kind of trade-off long-term investors want to see. Moving on to Section 3, Starlink, Enterprise, and Mobile. Sticky, high-margin revenue.
Okay, so consumer internet is great, but you have got to look at the sheer caliber of enterprise partners SpaceX is rapidly onboarding right now. Enterprise revenue is where the massive margins live. We're talking major agreements with American Airlines, Southwest, Virgin Atlantic, and international mobile carriers like SoftBank. But the absolute crown jewel of Q2, securing over $6 billion in U.S. Space Force contracts. Enterprise and government revenue grew 108% year over year. And as management noted, they have literally never lost an enterprise customer. It's just a highly durable, incredibly sticky revenue stream that drives total segment margins way up.
And that brings us to the future of Starlink Mobile. Honestly, this timeline spells out a direct threat to traditional telecom.
Next year, they're going to begin flying their specialized mobile V2 satellites. And crucially, they're integrating 65 megahertz of newly FCC-approved EchoStar spectrum right into this network. By the end of next year, their plan is to launch our mobile service capable of voice and video calls globally, literally eliminating dead zones entirely. When you consider that the U.S. Big Three telecoms generate roughly $600 billion a year, the total addressable market SpaceX is stepping into here is just staggering.
But they aren't just expanding their market reach, right? They're radically upgrading the product itself. The upcoming V3 broadband satellites are a huge margin expander. They are going to deliver 10 times the capability and data density of the already impressive V2 satellites. Plus, because Starship can lift so much more mass, they plan to launch 10 times as many of them. Think about that math. Even if their monetization per bit dropped by a factor of 10, they'd still see a 10x increase in revenue. This is a massive step function change in network capacity, and it's going to rapidly accelerate their enterprise offerings.
All right, Section 4, the AI compute engine, faster payback and incredible supply-demand dynamics.
Okay, if there is one single number you take away from this entire explainer regarding capital allocation, please let it be this one: less than 1 year. That is the payback period on SpaceX's new capital deployments for AI compute infrastructure. So the crucial point to understand is that when they deploy heavy capital into data centers and GPUs, it turns into revenue almost instantly, all because of massive industry demand. This is fundamentally different from, say, building a rocket launch pad that pays off over decades. No, this is an immediate cash cow.
And they are scaling that cash cow super aggressively. We're talking moving from 1 gigawatt in Q1 up to 1.4 gigawatts in Q2, and now they're targeting over 2 gigawatts by the end of this year. But the long-term vision? It's even wilder. Management actually indicated they want to bring 10 to 20 gigawatts of power and cooling online by the end of 2027. They are literally treating terrestrial data center construction with the exact same rigorous engineering discipline they use to prevent rockets from exploding. And let me tell you, it is yielding some totally unprecedented deployment speeds.
To fuel this huge compute rollout, SpaceX has secured an exclusive partnership with NVIDIA to utilize their cutting-edge Rubin architecture. This move perfectly showcases how SpaceX leverages its completely diverse expertise. They aren't just building data centers here on Earth. They are planning to deploy these optimized NVL-72 computers up in orbit next year through what they're calling Starmind AI satellites. And here's the brilliant part. By radically simplifying the rack design for the harsh environment of space, they realized those exact same cost and efficiency benefits could be applied right back to their terrestrial data centers on the ground. Moving along to Section 5, capital allocation, reinvesting for dominance. Now, despite the absolute sheer volume of cash being deployed here, notice the incredible discipline. It isn't just being scattered to the wind. Capital is being aggressively and efficiently funneled strictly into these three specific buckets we just discussed. So roughly a third goes to scaling Starship production and launch infrastructure. Another third funds the next generation Starlink broadband and mobile constellations. And the final third, which actually saw a massive $15.8 billion surge this specific quarter to capture immediate market share, well, that's dedicated to scaling that super high ROI AI compute infrastructure. And hey, speaking of capital efficiency, listen to this strategy for rolling out their new mobile network. Traditional telecoms spend tens of billions buying land, pouring concrete, and building massive terrestrial cell towers, right? Well, SpaceX plans to just deploy small cellular base stations directly onto the existing mounts of the millions of Starlink broadband dishes that are already installed on their customers' roofs. They completely bypass the massive upfront terrestrial tower capex, and they basically turn their existing customer footprint into this distributed global cellular network. It's honestly a masterpiece of operational synergy. Finally, Section 6, the road to $1 trillion and an accelerating timeline. So the immediate milestone to watch is this: $100 billion. Management stated they're on a very firm trajectory to hit a $100 billion annualized revenue run rate by the end of this December. And this is driven heavily by the $6.7 billion in new cloud services agreements they signed in literally just the first few weeks of Q3, along with the continued expansion of Starlink and their AI models. It's just a massive near-term financial target that they expect to hit simply by executing on their current backlog.
But I think the true gravity of their compounding growth is perfectly captured in this quote from Elon Musk. See, prior to their IPO, internal projections had SpaceX reaching $1 trillion in revenue by 2031. But because of the step function changes in Starship capability, the 10x capacity of Starlink V3, and that explosive sub-1-year payback on AI compute, They've actually pulled that $1 trillion revenue target forward by a full year to 2030. And as he says, there's a real possibility of hitting it in 2029.
So I'm going to leave you with this provocative thought as we wrap up today's explainer. I want you to look at the entire landscape of global business right now. Consider the interlocking synergies of basically monopolizing global launch capacity, delivering global high-margin enterprise internet, and deploying some of the most capital-efficient AI infrastructure on the planet. Does any other entity possess interlocking business segments that generate this unprecedented kind of cash flow and technological moat? The reality is SpaceX is playing a game where the closest competitors aren't even visible on the chart. Thanks so much for joining me on this deep dive, and hey, keep your eyes on that bottom line.